Welcome back. I'm Pratap here. Today is the 5th January 2024. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action course. You can access all the training videos from our YouTube channel. So please visit NeoStock YouTube channel, click on the home page and scroll down to the playlist Supply Demand Zone Price Action Course. If you click on this playlist, all the training videos are available starting from lesson 1.1 until the most recent lesson. Even all the upcoming lessons will be placed in this playlist. I am also providing the link to this playlist in this YouTube video description. So you can also click that link and directly access all these videos. Or you can also access all these video links from our NeoStock Telegram channel. I have also provided the link to the Telegram channel in this YouTube video description. And if you please subscribe to the Telegram channel so that each time when we release a new video, you will get an immediate notification. And please make use of this opportunity and strengthen your skills in supply demand zone price action theory, and definitely you will become a strong trader or investor with the help of the skills or the experience I am sharing from these training videos. Now let us get into our analysis part. So before we generate today's supply demand zones, let us identify the high liquidity zones generated in our yesterday's report. Let us analyze the high liquidity zones generated in our yesterday's report. Yesterday we have identified only one high liquidity zone, that is SBI Life. This is a daily high liquidity supply zone. We have a drop-based drop. This zone is violated today. Let us understand what happened today. What is our loss or what is our profit? All those scenarios, let us understand. So as per our high liquidity zone concept, always you have to fine tune the zone, high liquidity zone. How we will fine tune? By doing top down analysis starting from daily time frame until the 5 minutes time frame. So from daily time frame, I am shifting to the 75 minutes time frame. In the 75 minutes time frame, identified one ERC candle which can be used as a leg-in, and then we have 4 base candles, and then we have a drop candle. So this is the way we have drawn this 75 minute zone. So inside this 75 minute zone, you need to identify 15 minute zones, especially fresh 15 minute zones. So let us look into the 15 minutes time frame. In this 15 minutes area, I have identified one fresh 15 minute zone. This is a drop, base, drop. This leg out is not great, but okay, we are considering this. And then we have drawn a zone here, drop, base, drop. And what is the structure of this zone? For that, you need to look into 5 minutes time frame. Within that 15 minutes area. So here we have 1, 2, 3, 4, 5, 5 base candles. We have a drop, 5 base candles, and then we have again a drop candle and again another follow through candle. So 5 minute structure is also okay. There is nothing wrong. So definitely we can plan a trade when prices are entering into this zone. But unfortunately today, this 5 minute zone is violated. So it is not a successful trade. It hit the stop loss. So that way we got a loss. 1125 rupees loss as per one future slot, which is minus 0.58 ROI, the negative ROI we got. Whenever we get loss, we get negative ROI. It is just 0.58. Generally, we take a risk up to 2% as per our investment. That is as per our futures lot cost. But the loss is minus 0.58. Okay. After that, can we leave the trade? No. We got an opportunity. Always we get opportunities in terms of bull traps or bear traps. Because this is a supply zone, definitely we can find a bull trap above this zone. But as I explained you earlier, look for bull traps if your supply zone is very close to the distal line. The fine-tuned supply zone is very close to the distal line. In that scenarios, bull traps success percentage is high. I'm not saying every time bull trap will work. There are times traps also will fail. But traps are having higher success rate if a zone near to the distal line fails. Because institutions play like that. They keep a zone near this high liquidity zone. If it is a 75 minutes high liquidity zone, it is at the distal line of 75 minutes time frame. Or if it is a daily high liquidity zone, it is at the distal line of daily high liquidity zone. This zone is a daily high liquidity zone. We identified SBI Life as a daily high liquidity supply zone. So, but our fine-tuned zone is somewhere not at the distal line, maybe close to the middle of this particular zone. At the time, what is the probability of getting success for this bull trap, which is above the daily high liquidity zone? So definitely it is a question mark. So can we take a trade or not, or better to leave the trade at the trap? This is a question mark. But you have to observe one thing. Already there is a 15-minute zone at the distal line of at the daily high liquidity zone. Let me show you. Let me go to the 15 minutes time frame. At this distal line, already there is a zone. Let me draw the zone, supply zone. Then you may ask a question. If already there is a zone, why we didn't plan a trade? If suppose this supply zone is failed, there is another chance, the another supply zone which is above. We get a opportunity. Probably the pending orders in that zone will be a successful trade most of the times. But why I didn't plan the trade? The reason is, excuse me, the reason is this supply zone, this 15-minute supply zone is already tested. See here, we have a rally base drop, and after that again prices turned up. It gave the first test, it gave the second test, 2 times. It is already, that means some of the orders, pending orders in this zone are consumed. If that is the case, how can we trust this zone? So that is the reason why we didn't plan the trade in this zone. But because there is a supply zone, 15-minute supply zone, at the near the distal line of the daily high liquidity zone. Inside the daily 75-minute zone is there. It is not a high liquidity zone, but inside. So the distal line of the 75 minutes time frame and the distal line of the daily high liquidity zone, both are same. Even this 15 minutes distal line is also same. Generally, how institutions will keep a trap, they create a zone and people think that maybe we are, if some people ignore this zone freshness and consider this zone, they would have placed the orders. But there are no institutional strong pending orders, which is not unable to push the prices down. So definitely it hit the stop loss. When it hit the stop loss, what happens? All those traders who took short trades, they will covering their short orders. They want to book their stop loss. They want to exit the trade at the stop loss so that they go for long trades. To exit the long trade, they have to go for to exit the short trade, they should go for a long trade. So all the long orders will be triggered. What institutions will do? They consume all these long orders because they set up a trap just above this zone. So there is a 5 minutes trap Mostly you find traps as a 15 minutes time frame or 5 minutes time frame. There is a 5 minutes trap just above this daily zone. See, we have a drop candle, we have two base candles, again we have a drop candle. After that, see the move. There is a very considerable move. So definitely we can consider this trap. And moreover, this trap is a fresh trap. It's not yet executed. And today, first time prices entered into this trap area. See the demand, how strong the demand is today. And this within this trap, all the pending orders or institutional pending orders consumed all the order. And finally, see how the prices went down. Okay, fine. Now we are taking a trade here in the bull trap by considering the supply zone which is at the digital line, even though we didn't take trade because it is not a fresh zone, but this is violated. Definitely, we expect some pending orders in the trap will push the prices down. But what is the target? Target again, we are looking for a 15 minutes because these are all high liquidity zones. The traps are related to the high liquidity zones. So mostly we expect, maybe we can expect our target something like this. But look into the distance. It's a huge distance. What I mean is it's a huge reward. Our average ROA is 6.1. This reward looks like close to 9% or maybe 10%. And achieving the target, achieving that reward, is it possible? Sometimes it is possible, but rare scenarios. Then how to plan in case if prices did not reach, then how to plan? So yesterday itself I explained you trailing stop loss. Let us employ that mechanism. Go to the 5 minutes. Now see here from this area, any 5 minutes demand supply zone is violated. Let me keep on drawing these 5 minute zones. This is the first 5 minute supply zone. It's tested. First 5 minutes supply zone is tested, but it's not violated. The pending orders in this zone pushed the prices down. Okay, fine. So next zone is created. Yes, there is one more zone is created. Is it violated? No, not yet. But before that, again another zone is created below this. We have a drop, base, drop. It's not a great leg out, but okay, the follow through candle is there. We can consider. Now this zone, if I draw, you will get this leg out will be convincing now. Okay, now this zone is violated, this 5 minute zone. So what is our rule as per our trailing stop loss? The moment the supply zone is violated, at the distal line of the supply zone is going to be our target. We are confirming our target. Target means we need to exit from our short order. So the moment, why we need to exit? Because now the demand has been increased. This zone is violated means the demand is strong. That is confirmed. See here after that, prices again moved up, moved up, moved up. If you would not have exited here, how much profit we would have been lost? That means our profit margin would have been reduced. So today trailing stop loss helped us where we need to exit. Why we are looking for trailing stop loss? Because our target is very far away from this bull trap area. Because the target is very far, there is no guarantee that we are going to, prices are going to reach this target. That's why we employed the mechanism trailing stop loss. We keep on adjusting our target based on this trailing stop loss. The moment the first 5 minute zone is violated, there we want to exit from our trade. That indicates there is a change in the market dynamics. I always say markets are not static. Markets are always dynamic. Because markets are dynamic, the price structures also will be changing. Because price structures always depends based on the dynamic nature of the market. So that is the reason why this is the place we exited from our trade, from our short trade. And that way, SBI Life has given 11,700 rupees profit, which is 6.03% return on the investment, which is very close to our average ROA, that is 6.1%. So this is the way we have seen a successful trade in SBI Life, even though one of our fine-tuned zone is violated. This is the point you need to understand. This is about SBI Life. This is the only one high liquidity zone we identified. Now, let us generate demand and supply zones for all the time frames, starting from yearly time frame. Entry time frame is yearly. Let us find the stocks near yearly demand zone. No stocks are identified. For yearly time frame, let us find the stocks near yearly supply zone. No stocks are identified. Let us change the time frame to half yearly time frame. Let us find the stocks near half yearly demand zone. No stocks are identified. Half yearly time frame, let us find the stocks near half yearly supply zone. There we have identified one stock, UPL. Let's go back. Let us change the time frame to quarterly. Let us find the stocks near quarterly demand zone. And there are no stocks near quarterly demand zone. Let's go back. Quarterly time frame. Let us find the stocks near quarterly supply zone. So 3 stocks are filtered. So let's go back. Let us change the time frame to monthly. Let us find the stocks near monthly demand zone. And 2 stocks are filtered. Let's go back. For monthly time frame, let us find the stocks near monthly supply zone. One stock is near monthly supply zone. Let's go back. Let us change the time frame to weekly, because today is also end of the week. So let us find the stocks near weekly demand zone. So 2 stocks are filtered near weekly demand zone. Let's go back. For weekly time frame, let us find the stocks near weekly supply zone. 5 stocks are filtered near weekly supply zone. So let's go back. Let us change the time frame to daily. Let us find the stocks near daily demand zone. So 8 stocks are filtered near the daily demand zone. Any high liquidity zones? IDFC is there, already tested 2 times, and 4 rejections also there. That's it. We have only one high liquidity zone, that is IDFC, from this stocks near daily demand zone. So let's go back. Entry time frame daily. Let us find the stocks near daily supply zone. So 4 stocks are filtered. Any high liquidity supply zones? No. We haven't identified any daily high liquidity supply zones from this list. So let's go back. Let us change the time frame to 125 minutes. Let us find the stocks near 125 minutes demand zone. So these 6 stocks are near 125 minutes demand zone. So let's go back. For 125 minutes time frame, let us find the stocks near 125 minutes supply zone. 7 stocks are filtered. Okay, let's go back. Let us change the time frame to 75 minutes time frame. Let us find the stocks near 75 minutes demand zone. 4 stocks are filtered. We have only one high liquidity zone, which is already tested. This is C_DZ, JSW still. So let's go back. For 75 minutes time frame, let us find the stocks near 75 minutes supply zone. 16 stocks are filtered. Let us identify the high liquidity supply zones from this list. Grasim is there, already tested 2 times and 4 rejections. The next one is that's it, only one high liquidity supply zone. So let's go back. Let us change the time frame to 25 minutes time frame. Let us find the stocks near 25 minutes demand zone. So these 8 stocks are filtered. Let's go back. For 25 minutes time frame, let us find the stocks near 25 minutes supply zone. So 6 stocks are filtered. So let's go back. Let us change the time frame to 15 minutes time frame. Let us find the stocks near 15 minutes demand zone. 7 stocks are filtered. Let's go back. 15 minutes time frame. Let us find the stocks near 15 minutes supply zone. 10 stocks are filtered. Let's go back. Let's change the time frame to 5 minutes time frame. Let us find the stocks near 5 minutes demand zone. 7 stocks are filtered. Let's go back. For 5 minutes time frame, let us find the stocks near 5 minutes supply zone. And 8 stocks are filtered. So these are all the stocks near demand and supply zones for all the time frames. I hope this information is useful to you. Let us all meet again in our next video. Thank you.